You're probably using a currency that might not rule the world for much longer. The US dollar has been the undisputed king of global finance for nearly a century. But what if I told you that dominance is starting to crack? And that shift could change everything from your savings to how countries wage economic wars. At the end of this video, you'll understand the 3 unstoppable forces that could dethrone the dollar, and why most people won't see it coming until it's already too late. So let's pull back the curtain. In 1944, something big happened in a little town called Bretton, New Hampshire. 44 countries came together, shattered by the chaos of World War II, and agreed on one thing: to rebuild the world economy with the US dollar at the center. Why? Because America had the largest gold reserves and the strongest post-war economy. The result was simple but powerful. Global currencies were pegged to the dollar and the dollar was pegged to gold. This gave birth to the modern financial order. From that point on, if countries wanted to trade, settle debts, or hold reserves, they needed dollars. Over time, the system evolved. When the US dropped the gold standard in 1971, the dollar didn't collapse. It got stronger. It became the default currency for everything: oil, commodities, global debt, even black market trade. Central banks across the world stocked up on dollars like survivalists hoarding canned food. Nearly every international transaction passed through the US financial system. It wasn't just a currency, it was a weapon, a gatekeeper, and a global standard. But now, what once made the dollar so dominant is becoming its greatest vulnerability. One of the biggest threats? Weaponization of finance. In recent decades, the US has increasingly used its control over the dollar-based system to punish countries it sees as threats, freezing central bank assets, imposing sanctions, blocking access to SWIFT, the global messaging system for bank transfers. These are powerful tools and they've worked. But here's the catch. Every time the US uses them, it sends a message to the world. You're only safe as long as you play by our rules. So what do countries like China, Russia, and even India do? They start building their own systems. Russia now sells oil to India in rupees, not dollars. China is negotiating trade deals using the digital yuan. Even France, a US ally, has executed LNG contracts denominated in Chinese currency. And while these moves seem small, they're part of a broader trend: de-dollarization. It's a slow but steady shift away from dependence on the dollar. Central banks are diversifying reserves. Countries are holding more gold. Financial systems are being regionalized. And it's not just about avoiding US pressure, it's about trust. For decades, the dollar's strength has relied on the world's confidence in American economic leadership. But now, with over $34 trillion in debt, rising deficits, political gridlock, and the real risk of default during debt ceiling debates, that confidence is beginning to erode. What happens when faith in the dollar fades? We've seen this before. The British pound was once the global reserve currency, but after 2 world wars, a shrinking empire, and a mountain of debt, it quietly lost that status. Not in one day, not with a bang, but gradually, then suddenly. And here's a number most people ignore. Back in 2000, the dollar accounted for more than 70% of global foreign exchange reserves. Today, it's under 60%. That's not just a dip, that's a trend, and it's accelerating. But there's another shift happening right now. One not driven by governments or war, but by innovation in markets. And that's where things get really interesting. Let's talk about the second force that could shake the dollar's throne. Technology. While most people are focused on geopolitics, a quieter revolution is happening in digital finance. And it's moving fast. In the past, controlling a currency meant controlling the physical infrastructure. Central banks, vaults, payment rails. But today, money is becoming software, and that changes everything. Enter central bank digital currencies, or CBDCs. More than 130 countries are exploring or developing their own digital currencies. China is leading the charge with its digital yuan already being used in real-world transactions. The goal? To create a frictionless, programmable, government-backed currency that can bypass traditional banking systems. and yes, bypass the dollar too. CBDCs don't need SWIFT. They don't need US banks as intermediaries. And once these systems scale globally, countries can settle trade in real time, with zero dependence on American infrastructure. Think of it this way. If money is the bloodstream of the global economy, then the US has controlled the heart for decades. Now, countries are building their own circulatory systems. And then there's the rise of decentralized finance, DeFi. It's still early, still volatile. But DeFi is not a joke. Trillions of dollars have flowed through decentralized protocols like Ethereum, bypassing traditional financial gatekeepers. While governments are still grappling with how to regulate this space, its very existence challenges the need for centralized fiat currencies. For younger generations growing up in a digital-first world, the idea of trusting a currency just because a government says so, that feels outdated. And if enough people start to believe in alternatives, stablecoins, tokenized assets, even Bitcoin, the power of belief alone could start to shift the balance. Now here's the kicker. The US isn't just watching this happen, it's reacting. The Federal Reserve has begun exploring its own digital dollar, but it's moving cautiously. Critics say that in a world where innovation moves at the speed of code, caution could be fatal. And here's a paradox. The dollar's greatest strength, its scale and dominance, makes it hard to evolve. Every innovation threatens the status quo. Every new system risks undermining existing power. So, while other nations can experiment quickly, the US is stuck balancing innovation with preservation. But history doesn't wait. When the internet was born, companies that failed to adapt were swept away. The same could happen to currencies. Because the third force we're going to talk about, global demand shift, is coming next. And it's already changing where money flows. Now let's look at the third, and perhaps most underestimated force, the global demand shift. For decades, the dominance of the US dollar was supported by a simple fact: the world needed it. Trade deals were priced in dollars. Commodities like oil, gold, and wheat were quoted in dollars. Even countries that didn't trust each other still used the dollar as common ground. But that global demand is starting to fragment. The post-WOT world was unipolar. The US was the industrial powerhouse, the cultural exporter, and the military superpower. If you wanted access to global markets, capital, or stability, you used dollars. Now, the world is multipolar. China is now the world's largest exporter. The BRICS bloc, Brazil, Russia, India, China, South Africa, now accounts for a larger share of global GDP by PPP than the G7. And these emerging powers are no longer content playing by dollar-centric rules. They're building their own systems. China has created the Cross-Border Interbank Payment System, CIPS, as an alternative to SWIFT. It's still small, but it's growing fast. The BRICS countries are discussing a shared reserve currency. Regional trade agreements are being settled in local currencies. This isn't about replacing the dollar overnight, it's about reducing dependence. And that's what really matters. The dollar doesn't need to vanish to lose power, it just needs to be used less. Think about it. If global oil contracts move from 100% dollar-based to 70%, that's a massive shift in demand. If central banks decide to reduce their dollar reserves by even 10%, that's billions, sometimes trillions, looking for new homes. That matters for everyone, not just governments. Lower global demand means weaker dollar value. A weaker dollar means higher import prices, higher inflation, and more expensive borrowing. It could impact everything from your grocery bill to your mortgage rate. And here's the scary part. The US has been fueling this decline without realizing it. Massive fiscal deficits, endless borrowing, political dysfunction, government shutdowns, debt ceiling standoffs. All of this sends a loud message to the world. The US might not be the safe bet it once was. Meanwhile, the very power the dollar once granted is being used in ways that create backlash. Sanctions, asset freezes, extraterritorial enforcement. These tools work until enough countries decide they don't want to live under that threat anymore. and many already have. In 2022, after Russia was cut out of SWIFT and had $300 billion of reserves frozen, dozens of countries started asking the same question. If it can happen to them, could it happen to us? That fear is real, and fear creates action. Nations are now hoarding gold, establishing bilateral trade deals in their own currencies, building independent payment systems, shifting reserves toward commodities and digital assets. And slowly but surely, the network effect of the dollar, its greatest strength, is beginning to unravel. Because the value of a currency isn't just about economics, it's about trust, it's about belief, it's about whether the rest of the world is still willing to bet on your future. And right now, that bet is getting riskier. So what does this mean for you? If the dollar loses its global reserve status, or even just a portion of it, America will lose the unique privilege of printing the world's money. That means more inflation, lower living standards, and less financial stability at home. But here's the opportunity. Those who understand these shifts early can position themselves to benefit. Investing in assets that are insulated from dollar risk, diversifying geographically, watching what central banks are doing, not what they're saying. This is how smart investors stay ahead. The dollar's decline won't happen in a day, but the foundations are shifting right now, quietly, systematically, and if you wait until it's obvious, it'll already be too late. So if you want to protect your future, this is the time to act. So we covered how financial weaponization, digital disruption, and global demand shifts are all threatening the dollar's dominance. If you found this video helpful, hit the like button and subscribe for more deep dives on global finance. Let me know in the comments. Do you think the dollar will still be king in 20 years? Or is the new financial era already here? And if you want to understand where the smart money is going next, check out our video on the rise of gold, crypto, and real assets in a multipolar world. The sooner you understand the shifts, the sooner you can build real wealth.